The difference between average people, rich people, and wealthy people is that the average person has to go into debt to maintain their lifestyle. They're financing their vacation to Cancun on their credit card. They're financing their Gucci with buy now, pay later. They have the nice car, but they have to finance it and stretch to make the payments. Rich people have the money to buy those things, but they have to keep working to keep affording the lifestyle. If they stop working, they stop having the nice things. You might have a lot of really nice things. You might have a big house, fancy vacations, nice clothes, but if you stop working, those nice things would go away because you can't afford them anymore. Wealthy people, on the other hand, can buy the things that they want without having to go to work to get paid. They have the investments, they have the assets which are paying them money every single month or every single quarter or every single year, and they can use the money from their investments that they don't have to work for to pay for their expenses. So even if they stop working, they still have all the nice stuff. Now when you hear that, you might say, well, it must be nice to have that type of wealth. It must have been nice to have mommy and daddy give you that type of money. It must have been nice to have been born into that type of lifestyle, when in reality, the way that you get here for the majority of people, the vast majority of people, isn't by being born into it. It's by having the right money system on how to actually achieve that type of wealth, and that's what I'm going to show you in this video. See, the difference between a rich person and a wealthy person, we're going to ignore the average person, is that rich is measured in dollars, wealth is measured in time. I have met so many people that are making multiple six figures a year, sometimes even seven figures, meaning $1 million a year or more, that have no idea how to use their money. So what happens? You're a doctor, your wife is an attorney, you make multiple hundreds of thousands of dollars a year, but you have no savings, you have no investments. You have a big house, you got a Range Rover, you got a Benz, maybe you got a Jaguar too, you go to Cancun a couple times a year, maybe you go to Cabo, you have some nice stuff, but you have no real wealth to show for it. And that might sound crazy, but it's actually more common than you might think. Because most of us are never grown up with financial education. We're never told what to do with money. All we're told is to go to school, get good grades, make a lot of money, and then you'll figure it out. Because if you can get a good job, I mean, you should just be wealthy, right? But that's not how it works. There's a whole world of financial education that wealthy people understand that everybody else has no idea about. We're all taught formal education. Go to school, get good grades, get a good job. We're all taught to do that. We're all taught about the importance of getting a good income. That way you can support your family. That way you can feed your family. But we're never taught what to do with that income. And that's the key that wealthy people understand. They know how to use their income. That way their money can continue to make them money even when they're not working. And that's what I want to show you in this video. The game for every wealthy person is to take as much of your income that you're working to earn. This could be from your job, this could be from your business, it does not matter. You take as much of your income as possible and you're gonna dump it into these assets. And I'll explain exactly what that means and how you do it in a little bit, but the goal is to dump this money into these assets. That way these assets over time can start paying you more money. Notice how I said over time, it's not gonna be immediate. But then the goal is to live off of this income. That way you can take as much of this income, if not all this income, and just keep dumping it into assets. That way you can fund your lifestyle off of the money that your assets pay you. But the problem is, so many people, the vast majority of people, go to work or start a business to make money. Then as you earn this money, you go out and you spend this money. Maybe you want to go out and buy a house, you want to rent a nice place, you buy a nice car, you want to go on a nice vacation because you worked hard to get this career. And then you realize, well, you know, if I just made a little bit more money, I could have more freedom. I wouldn't have to worry about my bills as much. I could have more nicer stuff and maybe start investing or saving my money. So then what do? You work to get a promotion, you work to get a career change, you work to climb that ladder, maybe even work to grow your business. That way you can make more money. So now you start making more money, but then what ends up happening to the vast majority of people is you also increase how much money you spend. Maybe you get yourself a nicer home, maybe you get a nicer car or a second car. You got to celebrate this pay raise with a trip to Cabo. And so now as you start to make more money, you spend more money. This is called lifestyle inflation, and this is the fastest way to stay broke. I don't care if you're making $20,000 a year, $200,000 a year, or $2 million a year. You are going to stay broke if you keep spending more money every time you earn more money. The key to becoming wealthy now is as you make more money, you invest more money. And the problem here is this requires sacrifice. Because imagine this. Imagine you start making $50,000 a year and you can barely get by. But then you hustle, you work your butt off. You're trying to find ways to make more money, and now you go from 50 grand to $150,000 a year. Well, what do you think happens to the average person who sees that type of pay range? Which I get it, not a lot of people go from 50 grand to $150,000 overnight. But work with me on this example. What happens to the average person as they start making more money? When you make more money, you gotta show off that lifestyle. Could you imagine somebody making 150 grand, living off of $50,000 a year? Well, that's what a lot of wealthy people do, is as you make more money, you continue to live small for a small period of your life. That way you can dump more money into your investments. Because when you buy the investments, when you buy stocks, when you buy real estate, you can't show it off the way you can a BMW. When you buy the stocks, when you buy the real estate, you can't show it off like your trip to Cancun on Instagram. When you buy the stocks, when you buy the real estate, you can't show it off the way that you can your nice Gucci wardrobe. See, all these nice things make you look rich. All these spending money make you look like you made it. It makes you look like you're doing good. It makes you look like you're successful. When in reality, the thing that actually makes you successful is owning the investments. But you can't show it off. I can't show off my stock market portfolio. I can't show off my real estate investment portfolio. I can't show off my assets. But those are the things that are actually making me wealthy. Those are the things that are bringing in more income. Those are the things that are making me more financially free. But I can't show those off to you the same way that I can the Gucci, the BMW, and all the other fancy things. But these are the things that are making other people rich. See, when you go and finance the BMW, what are you doing? You're making the BMW salesperson rich, you're making the BMW company rich, and you're making the bank rich. But it's coming all out of your income. You're working hard to make BMW and the bank rich, but you're not making yourself rich. When you take that same money and you go out and you invest in a company, maybe you invest in the BMW stock, or maybe you invest in the Amazon company as opposed to spending all of your money on Amazon. Maybe you spend some money in the Apple stock instead of just buying a whole bunch of Apple iPhones. Maybe you spend some money on the Chipotle stock instead of just buying all the extra guac. I'm not telling you what to invest in. I mean, I'm just a random guy on YouTube. I can't tell you what to do, but the whole idea is shifting your mindset from just spending your money to now investing your money. Which now comes to the second part of the question, which is, well, Jaspreet, what do I invest in? How do I do that? How do I start building this wealth? Well, let me show you. But I want to remind you that for those of you that are investors and you want to stay up to date on what's happening in the financial markets, that's why I work to create Market Briefs. Market Briefs is a free financial newsletter where every day, 6 times a week, my team is breaking down what's happening in things like the economy, the stock market, the housing market, the crypto market, and the global economy into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that read Market Briefs every morning. So if you want to join, it's free. And I got the link for you down in the description below. When you go to invest your money, there are 2 things that you have to do. Number 1, you have to create a system for your money. And then number 2, you have to create a system for your investments. Let's do both of these, starting with creating a system for your money. So now we're backing up a little bit. You have an income. This can be your job, it can be your business. It does not matter how you earn your money, you are earning some money. You don't have to start a business to become wealthy. I know a lot of people on the internet say that you have to do that. That's not true. The vast majority of people who become wealthy will do it without starting a business. So you have a job, you start a business. Now, the key is, what do you do with this money? And we know that wealthy people are always investing their money. The average broke person is spending all their money. Doesn't matter if you're making $20,000 or $2 million a year, you can still be broke. So the way you're going to do that is to now divide up your money. I'd prefer it if you get 3 different bank accounts because you don't want to accidentally spend your investment money or spend your savings money. And what you want to do is have 3 different bank accounts, one for your spending money, one for your investing money, and one for your savings money. And the way you want to divide this up, a simple way to start is to follow something like a 75-15-10 plan, which says for every dollar that you earn, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest. 10 cents is the minimum that you save. Now, this means that you're only living off of 3/4 of every dollar that you earn. Is that difficult? You bet. Is it possible? Oh yeah. See, here's the thing. When you make money, the first thing that happens is you pay a tax. The government's going to take their fair share, or whatever they think is the fair share, of your money before you get to even see a penny of it. The reason why they do it like that is because if you had to write the check to the government, you'd probably freak out when you saw how much money you had to give the government. And the government also knows that if they relied on you to write them a check, you'd probably spend the money before you write the check to them. and so you might not be able to pay that check. That's why they tax you before you see the money. I want you to do the exact same thing. Imagine if the government raised your taxes by 25%. What are you going to do? Kick, cry, complain? Then you're going to find a way to pay it, because if you don't, you're going to go to jail. So now you're going to tax yourself, but instead of making the government rich, you're going to make yourself rich. That's why I want you to create 3 different bank accounts, and most banks will allow you to do this for free. If they don't, get yourself a new bank. So now money hits this bank account right here. You should have some money automatically pulled out of this bank account, put it into this bank account, and some money automatically pulled out of this bank account and put it into this bank account, depending on how much money you earn. You can automate this. Most banks will allow you to do this for free. The reason why you want to do this is you don't accidentally spend this money or this money. Now, when it comes to your savings are not there to make you wealthy. This is there to protect you against an emergency. Consider this like a cushion, a protection. You want to have somewhere between 3 to 12 months worth of expenses saved, depending on where you are in your life. You're 24 years old, you're not married, you have very little financial responsibilities, and you are okay taking on more risk, but maybe you don't need 12 months worth of expenses saved. If you're 45 years old, you're married, you got kids, you got more financial responsibilities, you don't really like a lot of risk, maybe you need 6, 9, or 12 months worth of savings to help you feel a little bit more comfortable. Once you know how much you need and you hit that goal, that's when you stop saving this money and you dump that money here. So maybe it becomes 75-25. And the reason why you want to do that is because this is where your wealth is built. You're not going to become wealthy by saving your money. If you grew up like I did, being told that the way you become rich is by saving your money, it's a lie. Why? Because your savings are being eaten away by inflation. They're losing value. Your savings aren't growing. But you need some savings to protect you, because sometimes life happens. Sometimes you lose a job. Sometimes your business goes under. So you want to have that protection. That way you don't have to worry about how you're going to eat. Now, your investments is where you're going to become wealthy. This is where you got to decide how and where you're going to invest your money. And that's the second part to your money system, which is how do you systemize your investments? What questions do you ask when it comes to investing your money? That way you can invest your money the right way. And then, of course, you're spending money. This is where, look, you got to start spending within your means. If you keep spending money you don't have, you're going to be broke. That means stop financing things that don't put money in your pocket. If it's 0% APR, that's debt. Buy it cash. And if it's a luxury, if you can't buy 5 of them, you can't afford 1 of them. Is that difficult? You bet. But if you start following those rules, in 12 months, you're going to be in a completely different financial place. And in 5 years, you won't be able to recognize yourself financially. And in 10 years, well, you're going to be living a very different life. The goal is for you to make a sacrifice today, that way you can live the rest of your life without ever having to worry about money again. My goal is not for you to just live small forever. I want you to make that sacrifice for a little bit, that way you can enjoy the rest of life and never have to worry about money. So now when it comes to your investment strategy, your investment system, let's break this down, because there are 3 questions that you want to ask. That is, number 1, what is your strategy when you invest your money? Number 2, what is your goal when you invest your money? And number 3, what's the right asset for you? So let me break this down, starting with the strategy. And again, just to make sure we're on the same page, what we're doing is taking this money and now we're deciding how to invest this 15% of your money or more. How are we going to actually invest that money? So let's break this down. That way you have a proper money system to become wealthy and not live broke, not live average anymore. There are 2 general strategies when it comes to investing your money. I break this up into what I call active investing or passive investing. Now, when I say active investing, I don't mean stock trading. I don't mean real estate flipping. I mean going out and investing in individual stocks, going out and finding individual pieces of real estate to invest in. You're still a long-term investor, but you're going to be more involved. There's more time. And there's more risk, but also more potential return. Because if I go out and I invest in the Amazon stock today, well, Amazon could take over the world and I could see my money 10x, 100x. I could make a whole lot of money. But Amazon could also run themselves into the ground and I lose all my money. So you can see how there's more risk involved, but I can also make more money. So when you think of active investing, think more risk, but also more potential return. Think more time and more work. When it comes to passive investing, this is a set it and forget it method. This is me investing my money into index funds or ETFs or mutual funds. This is me not going out and investing into my own individual property. I'm investing in real estate by investing in somebody else's deal. I'm investing in crowdfunded real estate. I'm investing in other passive real estate investment deals. That way I don't have to do the work. I just put some money in and I don't worry about it. This is set it and forget it. Less time, less risk, but also less potential upside. So, active investing, more work, more time, more risk, but also more potential return. Passive investing, less time, less work, less risk, but also less potential upside. Now you have to decide which one is better for you. Some of you are going to say, I love reading financial statements. I love going out and finding rental properties. I love the idea of being involved in my finances. Some of you are going to say, that sounds horrible. I just don't want to have to worry about that. I just want to put some money to work and not have to stress about it, not have to watch the markets, and not have to even think about it. Now, that's going to help answer your question. Do you prefer this or do you prefer this? Or is it a hybrid? Me, I do a little bit of both. I do this and I do this, and I'll show you how in just a minute. But you just have to decide where is the right starting point for you, because this is going to help you figure out what's the next part of your investment. So if you want to build a money system that allows you to live your life without having to worry about money, the first thing is you have to systemize your money. And we did that by following something like a 75-15-10 plan. But then we have to figure out how do you actually invest your money, and we broke up this into an investment system into 3 questions. What is your strategy, what's your goal, and what is the asset that you're going to buy? We talked about your strategy, which is, do you want to be more of a passive investor versus being more of an active investor? Now that you understand that, we could talk about your goal, so let's break that down. There are 2 general ways that you can get paid as an investor. You can get paid through growth, which is your stock value going up, your real estate value going up, or you can get paid from cash flow, which is your stock paying you a dividend. A dividend is a cash payment that a company gives you for doing nothing except owning the stock. You can also get this cash flow from investing in real estate. If I go out and buy a rental property and I do it correctly, this property is going to pay me monthly rental income profits that I get every month for doing nothing except owning the real estate, assuming that I have a good manager. That way I don't have to actually work to earn that money. So cash flow is I get paid every month or every 3 months or every year. I get money deposited into my bank account just for owning the asset. Growth is the value of an investment going up. Now you got to find what's right for you. When you invest your money for growth, the benefit is hopefully your money can grow faster. Because if you think about this hypothetically, if you invest your money into a stock and they have $100 million profit, well, if they give all that money away to the investors through a dividend, well, that means that they're not taking the $100 million and reinvesting it back into the company. And so if they're giving that money away, they probably wouldn't be able to grow as fast if they took the money and dumped it back into the company. So when you're investing for growth, they're not giving out that money in the form of dividends, and you will hopefully, it's not guaranteed, you'll hopefully see faster growth of the money. The second benefit is you control your taxes. See, if your stock goes up in value from $100 to $200 to $1,000, you don't pay taxes until you sell. So you get to decide when and how to do your taxes. With cash flow, it's a little bit different. The benefit of cash flow is you have a little bit less risk because you're getting that money today. If you buy a stock for $100 and they pay you a dividend or they're paying you this cash flow every 3 months, well, if that stock goes bankrupt, at least you got some of that money back in the form of dividends. So you have a little bit less risk because you're getting that cash flow. And the second thing you have to think about with this cash flow is, of course, you got to pay taxes. As soon as you get paid, you have a tax bill that you have to think about. Same thing with real estate. When you get rental income, you have to pay taxes. But as a licensed attorney, who is not your attorney, what I can tell you is if you become a real estate investor, you also get some great real estate tax benefits, which allow you to make money and pay less money in taxes. Likewise, when you make money from dividends in the stock market, you generally get more favorable, meaning lower tax rates. So yes, you want to think about taxes, you want to think about how fast your money is going to grow, but you also want to think of what's better for you. For me, again, I don't recommend what I do to anybody else. The bulk of my investments are for cash flow because I like cash flow. I can stack the cash flow from my rental properties. I can stack the cash flow from my stocks. And then I can use the cash flow to pay my bills. I can use the cash flow to pay for my vacations. I can use the cash flow to pay for whatever I want. Now, the reason why a lot of people don't like this is because it's also very slow. But I want to remind you that this is not a 1 year, 1 month, 2 year game. I call it a decade of sacrifice. If you could put in a decade of spending less and earning more so you can invest like crazy, well, that gives you time to stack the cash flow. Because if you start investing for dividends or rental income, guess what? Year 1, you're gonna make next to no money. Doesn't matter how much money you invest, it's gonna feel like nothing because you're getting such a low return. Year 2, very little return. Year 3, very little return. Year 4, maybe a little bit more. It feels like you're getting a little bit, but still nothing great. Year 5, okay, you're starting to make a little bit of money. Year 6, a little bit more money. Year 7, okay, now you're starting to see that you're getting the effects of this cash flow. You're starting to see the snowball effect where the value of investment's going up and you're starting to get the cash flow. Year 8, okay, now you're starting to see the benefits. Year 9, some decent cash flow. Year 10, now you have a decent stream of cash flow, assuming you keep investing your money every month over those 10 years. So to really see the impacts of this cash flow, it's a long-term game, but a lot of people don't want to wait all that time. So you just got to figure out what's right for you. Do you prefer the cash flow? Do you prefer the growth? This brings us to part 3. Once you understand the strategy, once you understand your goal, now we can talk about what asset do you actually go out and buy. There are 3 asset classes that have built more wealth than anything else over the last century here in America. Number 1, starting a business. Number 2, investing in real estate. Number 3, investing in stocks. So let's focus on those. Now, starting a business is different, and that's not really an investment. That's more of something you do actively. So I'm going to talk about that separately and ignore that for this video. If we focus on real estate and stocks, now you get to decide what's right for you. And one thing that I like to say is there's a lot of people on the internet that will tell you something along the lines of, if you want to build wealth, you have to invest in these stocks, you have to invest in these ETFs, you have to invest in these index funds and blah, blah, blah. There are other people that say, if you want to build wealth, you have to invest in real estate. You have to invest in multifamily real estate. You have to invest in single family real estate. The reality is that's all a bunch of crap. The people that are telling you that the only way you can build wealth is by buying this specific asset class are trying to sell you a program. The reality is, there are some people that have built more wealth than ever by only investing in stocks, never touching real estate. There are some people that have built an insane amount of wealth by only investing in real estate and never touching a stock. You gotta find what's right for you. Maybe you do both, maybe you do one, maybe you do multiple types of assets, and then you figure out what is the right game for you. So if we reverse engineer this now, let's say you like the idea of investing in stocks. You want to invest for cash flow and you want to be a passive investor. What does that mean? Now you can start looking for index funds or ETFs or mutual funds. These are 3 different types of funds that will give you cash flow in the stock market. So you go to Google and you search ETFs that will pay me dividends, high dividend ETFs. And then you'll find a few examples. I'll give you one example. I'm not telling you what to invest in, but for example, NOBL. This is an ETF that gives the exposure to S&P 500 paying dividends that are also dividend aristocrats. What does that mean? This is investing in dividend paying companies that pay out that cash flow, that are a part of the S&P 500, meaning they're one of the 500 largest companies in the stock market, and they're a dividend aristocrat, meaning they have paid out and increased their dividend every year for at least the last 25 years. Again, just one example of something that you can consider investing in. I'm not telling you that you need to invest in this or this is a good investment. I'm trying to get you to think how to do that research. Maybe you say, I want to invest in stocks for growth, but I want to be more of an active investor. Now you can start doing more research on what are some more growth opportunities? What are some more growth stocks that are not paying these dividends, that are more smaller, that are more risky, that could see big gains in the future? This is where you can start to do more research. We publish a lot of this research in our Briefs Media company. So if you join Market Briefs, you might hear us talk about Briefs Pro. In Briefs Pro, we have an investor research division of our company where what we're doing is we're researching active investments, particularly in the stock market, where we think that there are unique investment opportunities. That's something that you can consider if you don't want to do all the research yourself. Maybe you say, I want to be a real estate investor. I want to invest for cash flow. And I don't know if I want to be active or passive. Well, if you want to be active, now you're going to go out and find properties to buy yourself. If you want to be passive, well, now you can find funds or real estate syndicate groups or real estate investment groups that are looking for funding. If you go to any real estate investor conference in your area, there's always developers and investors that are looking for money. If you find companies online that are looking for investments, well, now you just dump your money into it and you don't have to worry about it. And now you're getting exposure to real estate without doing the work. That's the passive way to do it. Active is you go out and finding the property yourself. See, the name of the game is understanding the systems. But now the whole purpose of you doing this is that way you can invest your money and have the money that's working to make you more money. Once you do all this, of course, you have to know how to do the analysis, how to do your research. That's a whole separate video. But if we go back to the purpose of this, you want to build a money system that way you can build wealth and buy the things that you want and not have to worry about money. In order to do that, that starts with you systemizing your money, always having money to invest. If you don't do this, none of this matters because you have to have the money to invest in the first place. You have to have the money to invest because this is how you get wealthy. The investments are then going to work to make you money. Do you always make money when you invest? No. We see recessions. We see market crashes. Over the last century, we have seen 16 recessions. That means markets go up, markets go down. Real estate values go up, real estate values go down. Stock prices go up, stock prices go down. Over the long term, though, we have seen asset prices rise over the long term. So you have to understand the game. You put money aside to invest. Once you put money aside to invest, now you have to know your investment system. You go through the 3 questions. What is your investment strategy? What is your investment goal? What are the assets that you're going to invest in? And then you go out and you find the right investments and you stick with it for the long term. Remember, the decade of sacrifice is not 2 days, 2 months, or even 2 years. You got to stick with it for the long term if you really want to build wealth. Now again, if you want some additional resources, Market Briefs is a free financial newsletter that I have for you down in the description. And then if you want more investor research, you can check out some of our Briefs Pro products where we publish some of the research as well, if that's something that you're interested in. Let's assume that you make $5,000 a month. After taxes, you will be left around $3,833 a month. Now, when you get this $3,833 a month, you pay your rent, you pay your mortgage, you pay your groceries, you pay for some nice stuff here and there, and then you have no money to save and invest. So this is what we're gonna do differently.